These are the stronger areas to buy from by using this candlestick pattern. Welcome to the Trading Focus once again. Hope everyone is doing good. In today's video, we are going to explain how can you use this candlestick to master the better entries to buy from in the market. That sounds amazing, guys. Subscribe on the channel, leave the comment below, like the video, and we'll see you in a minute on today's video. Okay, welcome back. So, by starting, we cannot explain only an inverted hammer without explaining a hammer candlestick. So, a hammer candlestick will be formed when the price is moving down from the areas where we are expecting the market to be reversing from. A hammer will appear when the price is moving down. Okay, we have the candlesticks that are moving down. Now, at the end of the price, we start rejecting from the low. That's how we end up forming a hammer. This will appear from the areas of reversal or from the areas where we are expecting the market to be retracing from, where we are looking for entry to go for buy. So, for example, like in the trend continuation, okay, we are in the uptrend, making higher highs and higher lows. So, from the higher low, we end up forming a hammer from those areas. What will appear is that a hammer will be forming from the retracement. Then after that, we are going to be entering from a higher low. That's where we take a buy by anticipating the market to continue in the uptrend. So that's where we see a hammer in the trend continuation. So from the reversal areas, let's say for example, we have the market that is moving down, was making lower lows and lower highs. Then from the lower high, we start creating maybe a double bottom. In the double bottom, we end up forming this candlestick, which is a sign of a reversal to the uptrend. So we are expecting this time to change the direction to the upside. That's where a hammer candlestick will appear. Then we're expecting the market to reverse to the upside, and we take a buy from that area. The stop loss will be below the previous low, which is the low of the hammer candlestick. So, which means that the sellers was controlling the market by pushing down. Then after that, we start rejecting from the low, which is a sign of the buyers who are starting looking for dominating the market for the next move of the uptrend. That's how we end up forming a hammer by anticipating the market to continue in the upside or to change the direction upside. Okay, let's say from this example, we have a hammer that is formed from the retracement from this area where the market is in the continuation. We are in the bullish continuation this time. We formed a hammer from this area, from the retracement where we are expecting to be buying from. Then we are taking a buy from that area, anticipating the market to continue in the upside direction. So that's where we take a buy from, anticipating the market to continue in the upside. TP from that area. Stop loss is below the previous low areas. Okay, let's see what happened now. Hitting our TP. So in the trend continuation, that's how we can use a hammer. Then a hammer from the reversal areas, we are rejecting from this area. Okay, so as we are rejecting from that area, we formed a hammer from this area. We are entering from the formation of a hammer. So we are expecting the market to be reversing to the upside, changing the direction to the upside. Gonna be my TP1, TP2, TP3. Then this is my target from this area. Okay, we are still moving up. So now we go to our target. So those are the areas of reversal where a hammer candlestick will be appeared, then we are taking an opportunity from buying from those areas. Okay, now let's talk about an inverted hammer. So a hammer we have been rejecting from the downside, showing that the buyers are going to be controlling the market. Then after that, from the inverted hammer, we have the market that is moving down. Then we end up rejecting from the downside a little bit by pushing up with a full body from this area. So we end up rejecting from the upper side, and we close with a body lying on the bottom of a bullish candle, which gives the name of an inverted hammer. So this is a signal that the market will be reversing to the upside, or the market will be continuing in the upside direction. The buyers will be controlling the market. So now from the areas of reversals, we are expecting the market to be reversing from zones of support or demand. So when we see that inverted hammer, we are expecting the market to be reversing to the upside. Okay, so we have the market that is moving down. So from the downside, we create a head and shoulder. For example, after a head and shoulder from the retracement, where we are expecting to be buying from, entering in the market from the higher low, that's where we end up forming an inverted hammer from this area. So then after that, we are going to be ending up anticipating the market to be reversing to the upside. That's where we take a buy from, by anticipating the bulls to control the market by moving up. So from the areas of the continuation, which means we are in the uptrend, so we end up from demand or a retracement from the areas where we are expecting to be buying from, we end up with a inverted hammer, which means that we are expecting the market to be reversing to the upside. That's where we end up entering from, anticipating the market to continue as a bullish continuation. That's how we use inverted hammer in the market. So let's now move to the chart and see some example of how can we enter from the signal of inverted hammer. So from this example, we have the market that is moving up, which means that we are in the trend continuation, have equal lows from this area. We made a higher high. So to the higher low, we are looking for the higher high as the trend continuation. So we have a signal that showing us we are going to be entering by anticipating the market to continue in the upside. That's why we end up taking a buy from an inverted hammer, anticipating the market to continue in the same direction. Okay, now let's see what happened. Moving up, consolidation, still moving up. Let's see we can get to our target. So we end up go to our target from the continuation inverted hammer, where we end up getting that opportunity to enter from that. Okay, from this example, this is a hammer that is formed from the areas of reversal. We are anticipating the market to move up. So this is a double bottom from this area, where we end up forming an inverted hammer. So we are going to be expecting the market to change the direction to the upside. We are taking a buy from this area. Okay, this is a reversal. The stop loss will be below from this area. Okay, and the target will be from this area at least. This is the target. Okay, now let's see what happened. Still struggling, but we are getting closer to our target. Okay, now we finally got to our target. So guys, that's how we use an inverted hammer to take opportunities to be buying from that signal, anticipating the market to go bullish. So, and even from the hammer, that's how we use it, anticipating the market to be reversing to the upside when we are moving down. or when we are in the trend continuation means a bullish continuation, anticipating the market to be continue in the same direction. So guys, thank you so much for your time. Remember to backtest the strategy so that you can get a confidence from that, and you're gonna be ending up making money in the market consistently, then become a professional trader where you can make the money that can change your life. So thank you so much for your time. Until next time, take care. Remember to subscribe on the channel and be safe.